Hello friends, welcome back to our channel. Myself Priyanka Singh from Thakur Publication Private Limited. Today my topic is from UP BCom second semester Financial Accounting subject, chapter number 3, Royalty Account. My topic is the concept of sublease. Friends, before I start the lecture, I would like to tell you that I have already taught you the basic of royalty, the journal entry passed in the book of lesser, journal entry passed in the book of lessee, and some numerical on it. Those who have missed that lectures can get it from our playlist which is given in the description box. So as I have told, today the concept I am going to explain is of sublease. This concept is from the royalty chapter. So what is sublease? See, let's start with the meaning of sublease. There are three persons. One is landlord, one is tenant, and one is third party. Okay, landlord we call as a lessor, tenant we call as a lessee, and the third party. When landlord gives right to use his land to the tenant in respect of that pay him a royalty. Okay, this is the case of lease or the royalty payment. But when the tenant give the right to use the land which he has having of landlord, he give right to the third party, then that situation, when he give right to the third party, the situation of this raised to the process of sublease. He is a third party, or we can call as a sublessee. When the three people involved in the process of lease, that process is called as a process of sublease. Now the landlord will receive royalty from the lessee. Okay, now here the landlord will receive the royalty from tenant also, and tenant is liable to pay the royalty amount of third party also. Means what tenant will do, what lessee will do here, he will collect the money from the sublessee, and that money as well as his own money, means his own royalty and third party royalty, he will add both the royalty amount and pay it to the landlord, means the lessor. So whatever output he produce and whatever output the third party produce, both the output lessee will add and multiply with the lessee per rate unit of output, and then the whatever amount comes, that amount will lessee will pay to the lessor. Okay, so this is the case of third party. The royalty will be payable to the landlord based on the production of the royalty. So I think you understood the concept of sublease. Now in the sublease agreement, he is the original lessee or the lessee. He has two roles. Being a lessee, he has to pay royalty to the landlord, and he become sublessor. For whom? For the sublessee. He can also be called as sublessor for the sublessee. He receive royalty from the sublessee. So he can be also treated as a lessee. He can also be treated as sublessor. Lessee for the landlord, sublessor for the sublessee. Okay, so he has a two role over here. Then come to the, I think you understood the concept of sublease. Now in the book of lessee, means the original lessee, we have to prepare royalty payable account, short working account, and landlord account. Okay, and being a sublessor, he has to prepare royalty receivable because he has to receive the royalty from the third party. So royalty receivable account, short working suspense account. This is also called as a, we can also called royalty suspense account as a royalty reserve account. Why royalty reserve account? Because we have studied that in the book of landlord. If we are recording the transaction in the book of landlord, the money which we are going to get for him, it is a royalty receivable. It is royalty reserve. This we also can call as short working suspense account. And the third account which sublessor has to prepare is sublessee account, means the third party account. So These three account is mandatory for the lessee to prepare in his book. If there is a question asked to prepare necessary ledger account, and for the sub lesser point of view, he has to prepare royalty receivable account, royalty suspense account or royalty reserve account and sublessee account. So let's start with the numerical of sublease, which will be easy to understand if I'll explain with the help of the numerical. See, in this example, Mr. Ram obtained a mining lease, and from that he subleases a part of the mine to Gopal. So here Ram is a lessee, original lessee or lessee or sublessor for the sublessor lessee. Okay, he can be called as the original lessee or sublessor. Okay, and he obtain a mining lease, and from that lease he give some part for the mining purpose to the Gopal. So who is Gopal now here? Gopal is a sublessee. Gopal is a sublessee over here. So he is a third party. Gopal is a third party, sublessee or a third party. Now we have been told that show ledger account in the book of Ram, means the lessee book we have to prepare the ledger. So lessee book, if they have asked, we will have to prepare 6 ledgers as I have told right now. Moving forward, in the question, what else are given? Particular, lease in ton, sublessee, lease in ton. Okay, there are 5 here given. This lease ton is of original lessee, means of Ram. This unit produced by the Ram, and the sublease ton is produced by the Gopal. So what we'll do in this case, in the case of sublessee, we have to prepare 2 analytical table. One is the primary analytical table, which is of Ram data. With the help of Ram data, we will prepare primary analytical table. This we also called as royalty payable. Why royalty payable? Because this, with the help of this table, we will be going to pay to the landlord. In the year 2001, how much Ram produces? Ram produces 1000 rupees. And how much Gopal produces? 1000 rupees. So in the analytical table, we have been given Ram lease amount, produce amount, or Gopal lease amount. Then we have been also given royalty per ton of Ram is 2 per ton, and in the sublease 3 per ton. Minimum rent per annum is 15,000 in case of Ram and 10,000 in case of sublease. Short working recoverable. Short working recoverable is of 3 year for the Ram, and for the Gopal is 2 year. And we have been also told that in case of a strike, royalty earned will discharge all liability for the year only. What does this mean? This I'll explain when we will be preparing primary analytical table. Okay, so first we are going to prepare primary analytical table. Primary analytical table will look like this. Means first we have to put the year, then the production. In production we have divided into 2, that is lease ton and sublease ton. Then the royalty, here the royalty per ton will be of Ram, because this is a primary analytical table, so we will only use the per ton amount of Ram over here. Then the minimum rent which Ram has to pay is rupees 15,000, so we'll write minimum rent. Then the short working column, surplus column, then short working, how much short working we have recouped, how much we are not able to recoup, the amount which we are not able to recoup. At the end of the year we will transfer to the P&L. Okay, we will transfer this to the P&L. If it is not recoverable. Then the amount payable to the landlord, last column. So let's start preparing this table while putting the digit on it. 2001, 1000 rupees is lease ton produced by the Ram. So we have written 1000 rupees and Gopal has produced 1000. So we have written 1000. Why we are writing in the primary table both the ton produced, means Ram also, and the sublease lessee ton also? Because we will add this both the tons and multiply by the royalty per ton of the Ram, and that whatever the amount will come, that amount we are going to pay to our landlord. Okay, so in the primary and analytical table, the major difference, the major point which we have to consider while preparing it, that the ton amount, the ton produced which we will be recording is of not only of lessee but as well as of sub lessee also. We will add both the ton. So in 2001 we have written for 1000 of Ram, 1000 of Gopal, then that total of the 1000 plus 1000, 2000. We'll multiply this 2000 with 2 rupees per ton, then we'll get rupees 4000. After that we will write the minimum rent of 15,000 which Ram has to pay to the landlord. Then we put the digit of 2000 in the year 2002, 3000 ton of Ram, 2000 ton of Gopal, and the total of this is 5000. When we multiply this by 2, we'll get rupees 10,000. After that the minimum rent is 15,000, so we have written 15,000. In 2003, 12,000 amount of ton produced by Ram. In 2003, 5,000 amount of ton produced by Gopal. Add this, we'll get 17 multiplied by 2, 34,000. Minimum rent is 15,000. Okay. In 2004, we will write down the ton produced by Ram, 9,000, then 2,000 of Gopal, and add this, you will get 11,000. 11,000 multiplied by 2, 22,000. Minimum rent is 15,000. Then in the last year, 2005, ton produced by the Ram and the 12,000 produced by the Gopal. When we'll add this, we'll get 17,000 multiplied by 2, we'll get 34,000. Minimum rent is 15,000. This way we have prepared this much of column. After that, what we'll do, here the royalty is 4,000 which they have earned, and the minimum rent is 15,000. Means there is a difference of 11,000. This 11,000 is a short working amount, and in the surplus, we don't have any surplus in the first year, so we'll put dash over here. In the short working, there is no option of recoupment, so we'll put dash over here. In unrecouped column also, there is no option, so we will putting dash over here. How much amount we will pay to the landlord? We will pay maximum of royalty earned or minimum rent. So the maximum amount is 15,000. So we will going to pay the 15,000 to the landlord. Now in the year 2002, see, the royalty is 10,000 and the minimum rent is 15,000. So here also there is a short working of 5,000. So in the surplus there is a dash. Recoupment, there is no option to recoup, so we will putting dash. There is no option to transfer the unrecoup amount, so we are putting dash. And how much we will pay? The maximum of royalty amount and minimum. So 15,000 is the maximum amount in 2002. So 15,000 we are going to pay to the landlord. Now in year 2003, here the royalty amount is 34,000 and the minimum rent is 15,000. Means there is a surplus. Surplus, there is no short working. There is surplus of how much amount? 19,000. When we deduct 34,000 from 34,000 to 15,000, we will get surplus of 19,000. So this much amount we are having extra amount, excess amount. So in this year we have an option, because there is told in the question that Ram has short working recoverable in for the 3 years. So this is the first year, second year, third year, and in third year we got the excess amount of 19,000, and we have the short working of 16,000. So 16,000 will be used for the recoupment purpose. So in the third year, from this excess 19,000 rupees, we are recouping only 16,000, because this much amount of short working has incurred in first as well as second year. If we add this, we will get 16,000. So we have recouped in the third year this much amount. And how much we are going to pay to the landlord? When you will deduct 34,000 into 19,000, 34,000 into 16,000, you will get 18,000. So 18,000 we are going to pay to the landlord as a royalty. In 2004, the royalty amount is 22,000 and the minimum rent is 15,000, means there is an excess of 7,000. Okay, and the option of recoupment has been finished, because they have told only 3 years. So the remaining amount of 3,000, it's of no use for us. And here excess amount is 7,000. Okay, and in the last year also there is a surplus, because we have earned 34,000 and the minimum rent is 15,000. The difference is of 19,000. This is a surplus amount, but we don't have any short working right now remaining, so we will pay the full 34,000 to the landlord. Okay, so this is the primary analytical table which we have prepared considering this question and the ton produced by Ram and Gopal both. Okay, because we have mentioned both the ton produced, Ram also and Gopal also, means lessee also and sublessee also. Okay, after that we will prepare another analytical table, that is the sublease analytical table. We can call it as sublease analytical table as well as royalty receivable analytical table. This is the another table which we have to prepare in the case of a sublease. So this table is called as a sublease analytical table or royalty receivable. This table is prepared with the help of the data of Gopal. Why royalty receivable? Because this amount is been received by the Ram. This royalty amount will be receivable by the Ram. That's why we are telling it as the royalty receivable table. Okay. So first the same, here also we will prepare year column, output column. In the output column we will only write the output of Gopal. This output is of Gopal. Gopal production output. Okay. Then the royalty per ton. Royalty per ton is of Gopal. Royalty per ton is given in the question of Gopal is 3 per ton. Then the minimum rent in the question given is 10,000, which is decided between Ram and Gopal, that minimum 10,000 he has to pay to the minimum rent has to be paid by the Gopal to the Ram. Okay. Then the surplus column, short working, we can we here use the word royalty reserve or short working suspense. Okay, royalty reserve or short working suspense. Now the short working recoupment and short working unrecouped and amount payable to the landlord. This way we will prepare the second analytical table, that is the sublease analytical table. Now with the help of the question, here, as you can see, in year 2001 sublease ton means the Gopal ton is 1,000 rupees. Okay, then 2,000, then 5,000, then we will write over here 1,000, 2,000, 5,000. Okay, 1,000, 2,000, 5,000. But in the fourth year there is a strike, so he is not able to produce much of the output. Only 2,000 ton are produced by the Gopal, so we will write 2,000, and the last year output produced by the Gopal is 12,000. So, and the royalty per ton mentioned over, royalty per ton is 3. Okay, minimum rent is 10 or 2-year recoupment option is given. So royalty per ton is 3. So we will multiply 1000 with 3, we will get 3000, 2000 with 3, we will get 6000, 5000 by 3, we will get 15,000, 2000 by 3, 6000, and 12,000 by 3, 36,000. Okay. Then the minimum rent is given that he has to pay, Gopal has to pay to the Ram rupees 10,000. So in the first column, in the first year he has paid 10,000 as a minimum rent. In the second year 10,000, in the third year 10,000, but in the fourth year we have written 6,000 instead of writing minimum rent 10,000. Why? Because in the fourth year there has been strike. Whenever there is a strike, what we consider, royalty amount, whatever the royalty amount will come, that same amount we will consider as a minimum rent. Why? This is also written in the question also, that in case of a strike, royalty earned will discharge all their liability for the year only, because for that particular year, for that particular strike period, whatever the royalty earned by the person will be considered as is minimum rent. In the fourth year, the minimum rent was 10,000 though, but he has paid only 6,000. Reason? Because there was a strike. So royalty amount is considered as a minimum rent in the fourth year. In the fifth year, means 2005, there is 12,000. When we multiply by 3, we will get 36,000, and the minimum rent is 10,000. So for that particular strike period only, we will consider royalty same as minimum rent. Means if royalty earn is 6,000, then minimum rent is also 6,000. Okay. Now we will analyze this table with the help of this data. Here the royalty earn is 3,000 and the minimum rent is 10,000. So there is a short working of 7,000 or the royalty reserve 10,000. This is also called as royalty reserve. We will use this term only, royalty reserve, in this table for the sublessee purpose. And in the second year there is a short working of 4,000, because the royalty is of 6,000 and the minimum rent is 10,000. There is a difference of 4,000, so the short working is of 4,000. And we have been told for the recoupment only 2 years are allowed. 2 years allowed for the recoup purpose. So first year this one, second year this one. So second year and first year, the short working is of 7 plus 4 is 11,000, and till second year we don't have any surplus. So what we'll do, now the year of recoupment has been finished. He don't have option to recoup because only 2 years are allowed and there is no surplus in this 2 year. So this 11,000 amount will be transferred to the P&L. Whatever the short working which he is not able to recoup, he'll transfer to the P&L account. Okay. And in the third year there is a excess of earning, means the royalty earn is 15,000 and the minimum is 10. So the surplus was of rupees 5,000. Okay. Then the fourth year royalty is also 6,000, minimum rent is also 6,000. So there is no surplus, no short working. And in the fourth year 2005 there is a royalty earned is 36,000 and the minimum rent is 10,000. So there is a surplus of rupees 26,000. Okay. So 2 year there is a surplus, 1 year there is no excess amount, no short working, because both are same, and the first 2 year there was a short working. So this is the analytical table of sublessee. So friends, to purchase this bilingual financial accounting book, you can have it from our website as well as other website, social media website like Amazon, Flipkart. The links are given in the description box. So let's start with the ledger account, which will be prepared in the book of Ram. Ram is the original lessee. In the book of Ram is the original lessee. First account will prepare royalty payable account. royalty payable account means Ram has to pay royalty of his as well as sublessee to the landlord. So first we will prepare left hand side debit, right hand side credit, year particular rupee, year particular rupee. In 2001, how much Ram will pay to the landlord? So this we can see from the first table. We will use primary analytical table. How much amount he is going to pay to the landlord? That is of 4,000. Okay, this 4,000, how he get 1,000 plus 1,000, that is 2,000, multiply by 2, then we'll get the 4,000. So total amount of royalty earned which he is going to pay to the landlord is 4,000. Okay, and he has received money from Gopal also. So how much he has received, that we will credit, because in his account it will be credited. So he has received how much amount? 1,000 ton into 2. Okay, the output will be of Gopal and ton will be of Ram. Okay, 1,000 into 2, that is royalty receivable. 1,000 into 2 is 2,000. Okay, so he is paying 4,000 and he is getting 2,000. Balance amount will be transferred at the year end in the profit and loss account, that is of 2,000. This is the first year. Now the second year. Similarly, we will prepare in the second year. In 2002, Ram will debit his landlord account with rupees 10,000 because he has to pay rupees 10,000 in 2002 to the landlord. And how much he is receiving? He is receiving from Gopal 2,000 ton into 2 per ton. He is receiving in the second year by royalty receivable. He'll credit because he is getting the money, so he'll credit himself by royalty receivable 2,000 into 2, that is 4,000, and he has to pay 10,000. He is paying 10,000. He is paying 10,000, receiving 4,000. The balance amount will be transferred at the end of the year into profit and loss amount. In the third year, Ram is liable to pay 34,000 and he is receiving 5,000 ton into 2 per ton, that is 10,000. So in the credit side he will write royalty receivable 5 into 2, that is 10,000. So when we will deduct 30 from 34,000, 10,000, we will get 24,000. This is transfer in the profit and loss account. In the fourth year, again the same, the Ram is going to pay, liable to pay 22,000. Royalty amount is 22,000 in 2004. So to landlord, he will debit the landlord with 22,000, and the royalty he is receiving from Gopal is 2,000 into 2 per ton, that is 4,000. 2,000 into 2, 4,000. He is receiving money from this 4,000 from Gopal, and when we will deduct 22,000 with 4, the balance amount will be 18,000. Okay, in the last year, Ram is liable to pay to the landlord 34,000, and how much is receiving from the Gopal? 12,000 ton of Gopal and 2 per ton of Ram. When we multiply, we will get 24,000. When we will deduct this 34,000 with 24,000, we will get the balance amount of 10,000, which we are going to transfer at the end of the year in 2005 in profit and loss account. This way, the 5-year royalty payable ledger has been finished. Now this is the royalty payable table. Next ledger will be of royalty receivable. Royalty receivable table is prepared with the help of second analytical table, means the sublease analytical table. Okay, again the head title of this ledger account will be royalty receivable account. Left hand side will be debit column, right hand side will write credit, then year particular rupee, year particular rupee. Okay, now how much royalty Gopal will pay, means sublessee will pay to the Ram, how receivable means how much he is going to receive, Ram is going to receive through Gopal. So that's why we are creating the Mr. Gopal. In 2001, Gopal is liable to pay to Ram 3000. Okay, in the first year is liable to pay 3000, second year 6000, 15,000, 6,000, 36,000. So we will credit Gopal with this royalty amount. First one is 3000. We will credit first year with 3000. How much he has already paid? He will pay 3000. He has paid in the first year, you can say here, he has received, Ram has received, means Gopal has paid. How much he has paid? 2000. So 3000 minus 2000, 3000 minus 2000, remaining amount is 10,000, 1000. This will transfer at the end P&L account. Again in the second year, Ram royalty earned is of rupees 6,000. Okay, he has paid to the Ram rupees 2000 turn into 2 per turn, that is 4000. The remaining amount will be 2000, which has been transferred in the end of the year. Okay, that is the 2000. Now in the third year again Gopal is going to pay rupees, third year Gopal is going to pay rupees 15,000. How much he has paid in the third year? Royalty received by the Ram is 10,000. So we will credit the Gopal by 15,000. We will debit royalty payable with 10,000. The balance amount will be transferred in the profit and loss in 2000 year, that is of rupees 5,000. Okay, next will be 2004 year. In 2004 again Ram is liable to pay 6,000. He has paid 4,000. The remaining amount will be transferred in the profit and loss account. In 2005 Ram has a liability to pay to 36,000. He has a liability to pay 36,000. How much he has paid to Ram? In the fifth year he has paid 24,000. So we will credit Gopal, by Gopal 36,000 to payable 24,000. The balance will be 12,000. That will transfer at the end of 2005 to the profit and loss account. This way it got tallied. This is a royalty receivable ledger. Left hand side debit column, on the right hand side credit column. In center the title will be short working account. For this table we will use primary analytical table, means royalty payable table of Mr. Ram. So in 2001 there was the short working of 11,000. So we have debited landlord account with 11,000 and why balance brought down? Why balance brought down? Because in the first year there is no option of recoupment or no option of transfer. So we have balance, this 11,000 we have balance carried down. Okay, then next year we have carried this amount to balance brought down 11,000, and in the second year in the first table we have the short working of 5,000 rupees. So to landlord account 5,000. Again there was no recoupment in the second year, there was no transfer in the second year. So we will add this to the 11,000 and 5,000, will get 16,000. Will carry down this balance 16,000 by balance CD 16,000, and then in the next year we will brought down in 2003 to balance BD 16,000. Okay, but in 2003 there was a surplus of 19,000. There was a surplus of 19,000 and this 16,000 the short working amount we will recoup from this 19,000. So we will credit the landlord by 16,000. So it get tally in 2000 year. This is the short working account prepared in the book of Ram. Next ledger will be of royalty reserve account or royalty suspense account. Right hand side there will be a credit column, left hand side will be debit column, year particular rupee, year particular rupee. This royalty reserve or suspense account we will prepare with the help of sublease analytical table. In the first year there was a short working reserve of 7,000. So we have created by Gopal account 7,000 and there was no any surplus, so we have transferred it in the first year, that 7,000 rupees to balance CD. Okay. In 2002 we have brought down that to 7,000 by balance brought down 7,000. Then in the second year again there was a short working reserve of 4,000. So we have created Gopal account 7 with 4,000, and when we plus this 7 plus 4, that is 11,000. So only recoupment option is given of 2 year. So this first year is of 2001 and second year of 2002. When we add this 7,000 and 4,000, we will get 11,000 that we have transferred to the P&L account, because after second year we don't have option to recoup this amount. So we have to transfer this to the P&L account. So 2002 to P&L account 11,000. This way we have tallied 11,000 in the second year. Next ledger will be of landlord account. Right hand side will be credit side, left hand side will be debit side, year particular rupee, year particular rupee. Then for the landlord ledger we will use the first analytical table. So here in the first year, in year 2001, there was a short working of 11,000 and royalty payable is of 4,000. This is the due amount. So we have created landlord account with the royalty payable and short working. If we add this two, we have to make the payment to the landlord. The minimum rent which was decided was 15,000. So we have debited the bank account with 15,000. This way 2001 has been tallied with 15,000. Next year 2002. In 2002 there was a short working of 5,000 and the royalty payable amount is of 10,000. This is the due amount, so we have created this two amount. When we add this two, it becomes 15, and this 15,000 we have made payment to the landlord. So we have debited to bank account 15,000. In the third year, there was a surplus which we can see from the analytical table. In the third year there was a surplus of 19,000 and there was a short working of 16,000. So we have recouped this 16,000 in the third year. So we have passed the entry in the landlord book. In 2003 to short working 16,000, this is a recoup amount. To bank which we have paid to the landlord 18,000, by royalty payable that is 13,000. This is the due amount which we have to pay, that is of 13. So it has tallied 16 plus 18, 34,000, and here also 34,000. So with the 34,000, 2,000 year has been tallied. In 2004 there was a royalty payable amount we have created by 22,000 and we have made the payment in 2004 to bank account 22,000. In the last year the royalty payable in 2005 royalty payable account is created with 34,000 and the same amount we have debited to bank account with 34,000. So in this way the landlord account has been tallied in 2005. So the last ledger will be of sublessee account, that is Gopal account. Here the title will be Gopal account or sublessee account. Right hand side there is a credit column, left hand side there is a debit column, year particular rupee, year particular rupee. So here if you see from the second analytical table, the royalty receivable or royalty payable to Ram by the Gopal is rupees 3,000. Royalty payable is rupees 3,000 in year 2007 and the short working or royalty reserve is 7,000. So we will debit royalty receivable to royalty receivable 3,000, to royalty receivable 3,000 and to royalty reserve is 7,000. So 3,000 plus 7,000, that is 10,000. We are making the payment by bank account 10,000 in the first year. So this year tallying with 10,000. Next year again the royalty paid by the Gopal is 6,000 and the royalty reserve is of 4,000. When we add this to 6,000 plus 4,000, we will get 10,000. This 10,000 we are paying, means he is paying, so we have credited by bank account 10,000. Okay. So in 2003, the royalty receivable amount, we have credited royalty receivable by 15,000 because Gopal has to pay 15,000 to the Ram. So by bank, we have credited by bank with 15,000. Again, the similar manner, in 2004, royalty receivable account is of 6,000 and by bank the same amount has been paid. So credit side we have mentioned by bank account 6,000. Last year in 2005, royalty receivable account is 36,000 and we have paid that amount, we have credited by bank with 36,000. So the last year has been tallied by rupees 36,000. So this is the last ledger which we have prepared in the book of Ram, means the lessee. Thank you for watching this lecture and stay tuned with us for the next video on this topic. Thank you very much.